There were two, I think, really good trades today, two, I think, very easy trades today. One was buying one tick above the one tick breakout in a market that's in breakout mode. So I think that was good. I think I talked a lot about this in the stops as it went along. And anytime you have a breakout, you should always look for a possible measured move for the height of the breakout bar. I think this is a tougher trade to take than this. This is, as good a looking wedge as you're going to get. So I think, that is a good trade. At a minimum, there should be a measured move from, a tick above the bar to a tick below the bar. That's your risk, and that's pretty much the way the market went. You're risking, you're in at 68 1/4, you're risking to below it. So you'd expect, a measured move at least to cover the risk that you had to take, and that's just about where the market went. This is the kind of trade setup you look for. You have to take that trade, and you have to take the risk. If the risk is too much, you trade smaller. Beyond that, I think a lot of the trades were kind of hard. I think shorting below this was okay. I didn't buy above this. I think buying above this is not good. There's too much of a chance of two pushes down. Buying above here is okay, except you got that double top to overcome. And once the market overcame that double top and pulled back, I think the second attempt to break through it was pretty good. Shorting below this for a test of this, it's okay, but you're risking a pullback. I would not take that, but I do think it's okay. This was a great bull trap. It had the bulls looking long. As I said, I shorted up here. I don't know if I mentioned it in the room or not, because I was expecting 2 legs down. So I thought it was reasonable to short there and just put a stop above the high. But I scalped it, and this just didn't look the way I wanted it to look. I wanted to short it, but I just couldn't bring myself to short it, because of what I said. This low 2 was not great because I wanted at least a 2-tick bear body to erase some of the effect of the two-sided trading. These tails, didn't get it. This was a lower percentage trade. When I see a lower percentage setup, I typically trade small. When I see a strong setup, I take a full position. And then through here, this is all, I think, hard to take. And to be honest, I wasn't paying that much attention to the E-mini. Once I decided that I wasn't going to be buying the higher low, I just went over and started trading options frantically, setting up trades for the next day or two. Okay, for tomorrow, this is a channel down. It could be viewed as a spike in a channel. I think there's a decent chance that the market's going to try to come up here tomorrow, both because of the 5-minute chart, possible spike in channel, 2 legs down, trading range, try to come back up here, and because of the 60-minute moving average. It looks like it's right around 66. So, every time the market's been going below the 60, it's been pulled back to the 60. So I'm assuming the market is going to come back to the 60 moving average tomorrow around 66. So at a minimum, that would be up in this area. Anyway, it'll be interesting. If the market truly is reversing, we could get some hard down days because I think the fast money crowd, they've been just buying, and this market is way overdone. So when it does correct, it probably will correct deeper and for more bars than what traders expect. All right. Good night, everybody.